So today, as I said earlier, we have a new segment. It's called Stock of the Week. And today we are going to look at Diamond Trust Bank. So Diamond Trust Bank started operations in Kenya in the year 1946. They first listed, they listed on the Nairobi Securities Exchange in 1972. As at 8th of October, that is on Friday, their shares closed at 62 Kenya shillings, or in that neighborhood. So DTB operates in 4 countries. They operate in Kenya, of course, Uganda, they operate in Tanzania and Burundi. Now, it's important to note that Diamond Trust Bank is affiliated to the Aga Khan Development Network, which other companies affiliated to it include Jubilee Insurance. We also have Nation Media. We also have Farmers Choice. We also have Peptang and the likes.
Aga Khan?
Yeah, so
Hospital, sorry.
It also emerged that that is this week that one of the Business Daily ranked CEOs, you know, according to their stay, that the length of time they've spent in the companies. And we saw that the CEO of DTB, she has been there for 20 years, actually, since 2001, and today we are in 2021. Now, the DTB shares have not been performing well over the years.
It's the worst performing Kenyan bank.
Yeah, according to Bloomberg, that so far, up to last month, Equity was the best performing bank and DTB was the worst performing bank. Also important to note is that DTB is a tier 1 bank. So guys, why do you think we are where we are? Because DTB shares, there was a time it used to trade at 250, you know, 220, 200, you know, and now it has shed value up to 60 to 62. And if you look at the last 4 years, they've lost a market cap of around 36 billion. So guys, what do you think is happening?
Easter, you want to start?
I wouldn't mind.
Okay.
So I think, again, first of all, DTB is, at face value, DTB is a very good bank. The customer relations, how it's portrayed outside there, how it's put itself outside there, it's a very good bank. Competitive, you wouldn't. In fact, if you do a quick poll on Twitter on the companies or enterprises, not just banks, if you take a wider scope,
yeah,
find out which company is doing good.
Yeah, DTB actually
is among the best.
Yeah, I've interacted with some of the customers of DTB. My parent is one of the customers, and DTB is actually good.
So they're served well.
Yeah.
But now the problem I think comes to the management. I could be wrong. I hope I am, because I don't. It's very precarious to have your company having a not so good management. You understand?
Yeah.
So here's the company now. The troubles it's facing. For example, last year you saw that when other banks, is it last year or this year, when other banks are reducing their NPL provisions, DTB was increasing theirs. That is, of course, every bank last year, most banks at least, had issues, had made provisions for non-performing loans the previous year because of Corona. Then when Corona now reduced the effect, people knew how to live with Corona. Now they decided to reduce the NPLs, most banks at least.
Yeah.
DTB increased theirs by, I think, 20-something%. So, and that is attributed to its customers and the industries the customers are in.
Yeah.
So, for example, if you look at DTB, the core customers, most of its customers per industry is not real estate, tourism, or what, hospitality, such. So, mostly industries which did not rebound even with Corona. People learning to live with Corona. Yeah. So, who do you blame that on? Really, it's the management, because these are the people who sit on the board and decide that, you know what, this is how much you're going to diversify. This is how much money how much of our loan book we are going to give to this industry and to this company and all that. Yeah, and for me, just let me interrupt you.
Okay, no problem.
To add on to that, remember what happened to Nakumatt? DTB was one of the most exposed banks, with Nakumatt going down. They're the ones who had given Nakumatt the most debt. So again, why is it that it's investing? It's investing its assets. That is the loan book. Yeah. Its loan book is not so. It's not so what appealing, because it's it's mainly people when you hawaizi lipa hii pesa very
Yeah,
easily.
so
They're
there's
not
a
in a
lot
good
of
position
there's a lot
to
of
pay.
exposure in that.
Yeah, and it's not. It's let's just say the loan book is bad, and who do you blame that on?
Yeah.
Management.
Yeah, I mean, and we saw a report from Deloitte that East African banks really need to be careful with how they do assessment so that they decide whether to give you
Risk assessment, that is.
risk assessment and how much we give you and the likes. But for people who own DTB shares, they're currently they're not happy people because DTB has always withheld earnings a lot.
Yeah.
So you find that sometimes they'd retain even 90% of the earnings, but then you don't see what they are doing with the money. Okay, because
So where does it go?
it would make sense for Equity and KCB to withhold their earnings because you find that they have expansion
Expanding,
plans, you know, they buy a bank in DRC and the likes. But then for DTB, they're withholding the money, but you don't really see where the money is going. So that has really, you know, it's been a headache for investors on that front. But for me, one thing that I see this, I've talked to a lot of industry players this week, you know, in preparation for just to understand better about DTB. And I've actually found that many people have that perception of they perceive DTB in the same, they put it in the same box as, you know, Imperial Bank, Dubai
Chase
Bank,
Bank,
and Chase Bank, you know, which went down in quick succession in 2014, 15, and 16.
Yeah.
So they have that perception that DTB looks similar to
caliber.
this.
Yeah.
Okay, and so probably things might not be good, and that is attached to one thing. And I don't really want to say this because I really have to choose my words very well. But for lack of a better word, and we without any malicious intent, many people, common people, view DTB as a Muhindi bank.
Yeah.
I
You know,
looked at
because
their board.
You look at their board, and they have 11 people.
Not
on
to
their
say that
board.
it's bad, but it speaks.
Yeah.
It speaks.
11 people on their board, and only 2 people are of African descent, for lack of a better word.
As a chairman and the finance leader.
Yeah, so the others are of Asian descent. So that's probably one of the reasons why investors have been having that perception that this is a Muhindi bank and it's now associated with Chase Bank and Imperial. What do you think, Alia?
Yeah, to be honest, when you mentioned that, actually, when you did mention that your parent has an account with DTB, I was actually surprised. I was like, okay, is there DTB in Baringo?
No. There's no in Baringo. There's in Eldoret, Nakuru, yeah.
Okay.
People know where you guys are coming from.
Yeah, that I haven't seen a DTB. Yeah, I haven't seen it in our neck of the woods. So I think it's a perception thing, which honestly I think for DTB to be more appealing to a wider range of investors, I think it's something that they need to look at. It's something from a PR perspective.
Diversity.
They need to maybe hammer it home a little bit more that we are not a Muhindi bank.
Yeah.
Because
perception is everything, Khaled. Sorry for interrupting you. Because going back to Equity Bank, you know, Equity Bank became a commercial bank, I think, in 2003.
Yeah.
Okay? And at that time, you had Standard Chartered and Barclays having 55% of the profit market share in the banking sector. Okay? So, but today, Equity is by far the most profitable bank because of perception. Equity perceived themselves as a Mwananchi bank because of things like...
I really remember the marketing that they used, the campaign that they
Mimi
used.
remember. Yeah.
Even Safaricom.
And the things like...
You know,
Nikona Safari-
you see the way-
Nikona Safaricom, even the models they use in the ads, it speaks to people.
And you know, one
because you've also
important
seen the
characteristic...
Safaricom advert for Ethiopia. It's actually very cool. You should go
The
check
one
that
with the
have
whip.
coffee.
Yeah, the one with the whip, as in it's very cool. Anyway, carry on.
So going back, I was saying that some characteristics used to show that Equity is really a Mwananchi bank because at that time banks used to have this provision where you need to have a minimum balance and the likes. So Equity
even
came
how
and
you
said,
dress when you walk into a banking
Equity
hall.
came and said, okay, open an account. It's not a must. You have a minimum balance.
Yeah.
Then again, things like ATM card. Okay, you want an ATM card.
Yes.
You live with it as soon as you open your bank account. So that kind of thing, the perception that
And then
this is
also
a
the
Mwananchi
swiping,
bank, that's
the
everything.
removing transaction charges from from swiping.
Yeah.
I think Equity were among the first people to also do that.
Now you understand why perception is very, very important in
Yeah,
Kenya.
because even when you raise that, initially I was thinking, okay, yeah, we are talking about it being perceived as a Muhindi bank.
Asian, yeah.
Yeah. So an analyst would be like, well, does that matter?
Yeah.
Yeah.
Like for me as an analyst, like what am I supposed to look at? I'm supposed to look at, I'm looking at the numbers. The numbers are good.
Are they though?
Like, okay,
Assumption.
I'm assuming, like I'm just supposed to make a judgment based off the numbers I'm seeing. But I think such things, and we've spoken to the rise of Equity Bank, especially how it does help people grow. And it helps, like when you're looking at the outlook in a much bigger perspective. If you're able to find a DTB,
Never seen a DTB advert. Just saying.
That you haven't been looking anyway.
Oh, me, I've never. I don't remember seeing one either.
You know where you've been seeing them.
No, maybe it's a customer.
No,
thingy,
no,
because
not really.
We're not customers.
I mean, if you look at most city clocks in Nairobi, you'd find their DTB as advertised there and the likes.
Yeah. So, I think that's one. The perception is one. I hadn't even thought about it coming into this.
Can you factor that when you,
pod.
like, for example, doing a financial model as a finance person?
No, because it's a qualitative.
Yeah, it's
attribute.
like brand attribute. It's an asset, but you can't.
But you see the way you can put a value on
it.
goodwill.
Yeah, I think it's something you can probably assess and say what's the perception, and maybe look at. I don't know. It's maybe compared to the other tier 1 banks, for instance, with a similar capital base, and that, like, you can probably look at where are their bank branches located, that kind of area.
We could just factor it or put a value on it as a brand.
Yeah, but I'm trying to say, because how you end up quantifying this, for me, how I would go about it would be like, okay, let me map out the locations of branches and ATMs across the country, compare it to your peers, and then see I would use presence.
But presence is measured using digital at the moment as we speak.
Yeah,
but I understand what you
Yeah, that is what. Yeah, me, I'm not.
You guys,
I'm not a bank, but as an analyst, that's something I would think along those lines.
Let me throw a span in the works. So, do you think that things would improve if DTB did a share buyback program, just like their affiliate company, Nation Media Group?
With what money? With debt?
No, they retain the earnings that they retain.
They have good retained earnings.
They usually retain a lot of which is one of the biggest.
Then why are we not seeing that on their equity?
Don't retain as much. Just pay your investors.
Let me get there.
So there's no need for a share buyback.
It won't work.
I don't think so, because if you do a share buyback and you're still not retaining a lot of your earnings, and investors are wondering, okay, you're retaining these earnings, but where are they going to?
Because the share price is not appreciating as you'd expect.
Yeah, where is this? Because that's, I think, the biggest questions I've seen with guys who've invested in DTB. It's like, where's the retained earnings going to? They're not necessarily making aggressive plans of expanding. Just that money is just seems to be just sitting
evaporating. There. Not even sitting, because you can see it in their balance sheet.
So I don't think a share buyback would help anything. But
I mean, I'm looking at the graph of DTB, as well as I think there's the NSE 20, if not the NSE all, and it's important to know that DTB is actually in the NSE 20.
Why? And so, there are better banks. Is it that representative of the banking sector?
It's a tier 1 bank, chief.
No, we have better tier any chief.
No, but it's a market cap. Is it a market cap? What determines the NSE 20?
I think it's more than just market cap. Anyway, so looking at that, the graph of DTB and that other one, it's actually in tandem, but then at around 2019 it went apart. While this one for NSE was going up, the one for DTB was going down and down and down. And even in 2020, when it went down and came up, DTB was still going down.
It is weighing down the other components of this index.
Absolutely. Yeah, of course.
And by the I was looking at the chart again, now that you've introduced graphs. I was looking at the graph, and the trend coming from as high as, you said, 200 and something.
Yeah, 250.
As to as low as, now it's at 60 something.
Yeah.
The graph sort of shows that it's getting to a resistance, a point of resistance. So it's bound to go up. So if you're to issue a buy, sell, or hold recommendation, I don't know what you guys, Kalia, Keegan, what would you guys recommend?
Yeah, that's what I was trying to.
Of course, please don't buy this. This is not investor advice.
No, it's yeah. If you're looking for financial advice, look for a registered and accredited financial advisor.
Yeah, I wish. Okay, when we were looking at the return, there was a chart that was done by Mwango Capital, where they were comparing the return on equity,
price to
and
book.
the price to book versus the price to book ratio for 8 banks in Kenya. And so basically
are those the tier 1 banks? Are they 8?
There were 8.
Not all at tier bank, tier 1.
Yeah, because they compared Diamond Trust Bank, NCBA, I&M, Corp Bank, Equity, KCB, Standard Chartered, Absa. Yeah, I think most of the tier 1 is covered.
Yeah.
And
lo and
behold, the DTB was lagging considerably because they have an return on equity of around 8%, which is still the lowest.
Reducing, and it is reducing.
Yeah, and that it has been reducing. It's more or less the lowest.
And they are the only ones below 10%.
Yeah, they're the only one below 10% return on equity, and then the others are so. Corp and equity seem to have like very high.
Yeah, I think 16% and above.
Yeah, very high return on equity.
I have a question.
Yeah,
we were wondering where the retained earnings go to, and the fact that the return on equity is coming down, is reducing.
Yeah,
could it mean that the profits are sort of in the same level or similar level, but because the equity portion of the balance sheet is expanding, that's why the return on equity is coming down? Because if what would that say? If the equity
that's the case.
Equity bit is expanding, then it's because of the retained earnings. Because they are not, again, or unless there's a time they did a rights issue.
A couple of times.
Yeah, a number of times.
2012, I think 2014
that could
as
be
well.
the factor. Add that to retained earnings and all.
Yeah. So actually, that is a very plausible and a very logical explanation.
Dub,
yeah, my coffee.
let's
no, don't clap for people will think I don't know these things, man.
Anyway.
So I think with that, basically, I think at this point, with the direction, the return on equity seems to be reducing year on year.
Yeah.
They don't seem to have a good reason why they're not paying out divs as much compared to
someone is it Mwango Capital that was like, this is a one-way relationship, that you're only coming to us when you need us in terms of money,
but it's not coming back.
DTB was going to the investors for funds, shareholders funds, and is it 4 times consecutively
in the past decade,
and no single time did they ever issue anything to the shareholders in terms of a dividend, and so you're not getting dividends, and you're also not getting capital appreciation in terms of the appreciation of your stock.
Yeah, so
must be sad, man.
So I think
being a shareholder,
when you look at that, shareholders are very, very.
I hope they have health insurance covers.
Very, very sad. I think I've talked to a couple. No, just there's a DTB shareholder I was having a chat with, and he seems hesitant to pull his funds or sell.
He's still hopeful.
In my opinion, one should not sell.
Really?
Yeah, don't.
Why?
You see some hope in it?
Not some hope. I think it's what we called it's normally called sunk cost principle.
Sunk cost fallacy.
I mean, it's, man, you've taken the beating from 250, so just chill. Like you've taken a proper beating.
Just kubali your losses, cut them,
chill.
and move.
Yeah, cut your losses. You see, when you tell an investor not to sell, it's because you're having some hope that, you know what, if you sell now, you'll regret.
Because most likely, if you're
then it will appreciate later, then you will sell it later.
I mean, if I came from 250 to 62,
So you just let it
Just
go.
take me to zero. Because I've seen it all. I've seen it all.
And you can imagine the opportunity cost lost all this time you're holding, because you can imagine a firm like a company like Safaricom, like it's just been going up and
Yeah,
back, equity, the
KCB.
same. And even now you can still like cut that 62 and maybe invest in equity.
Exactly.
Move it to equity. So essentially it's like we are having equity as our favorite
and
stock in a way.
Actually, I'd say one should leave, particularly for one reason. Sell. We are going into an electioneering year. There'll be that curve. Then again in 2023, there'll be that upward moving curve, a rebound. There's money to be made in the bounce.
Yeah, me I think
In the bounce.
Me I think
Because I was about to tell you that, I was about to attack you that you're contradicting yourself. At one point you're like, don't sell, then now you're like, sell.
me I think
But generally in the bounce, so
me I think next year would be a good time
to buy.
to buy.
Yeah.
Yeah.
Especially around July when things are really hot. Anticipation for
Yeah.
election is just 1 month away.
So I don't think I need investment advisor certificate or license to say this. Save your money, save up. Next year when the economic activity goes down, put in your finances into the NSE. Then look to exit like a year after when things have started rebounding.
Yeah, I think, okay, just a comment that I've found myself thinking. And again, I don't know how to put it in a way that doesn't doesn't make me look like a douche. But
Just
again,
say Ashakum si matusi, then you put all the abuses there.
again, when you're talking about the perception of DTB being a Muhindi, when you look at Imperial Bank,
Wow.
was it?
Yeah. Yeah.
You see, as in,
Yeah.
I'm saying that's why I was like, I don't know how to put it in a way that.
So
we look at
it's
Imperial Bank
associated that
again,
way.
which had a lot of impropriety,
Affiliations to the
and there was a lot of
one
impropriety. Yeah, and a lot of the point I'm trying to go towards is like there was a lot of impropriety,
Yeah.
and so we have Imperial, we have Nakumat, which also just recently, in as much as Bharat was cleared, we've had WPP, Scan Group. These are three, which it's a small.
Why is Chase?
But
just-
I'm concerned about that. I think they are now that would be a misrepresentation, because we have, of course,
That's the risk.
companies that are doing
Yeah.
stellar work, Bitco and the likes. Yeah, so
Which have been doing well, but I'm just saying, I don't know. Like if you're to look at some of the companies that have potted with people's monies,
anyway,
and now with these questions
Yeah.
on retained earnings, why is dividend payout not as high as it should be? Yet we're not seeing where the money is going. Is it something that questions should be asked? Am I wrong for alluding? I don't want a libel suit on my desk. Please, my name is Easter Fanning.
Oh, please. Come on.
anyway, we've hit the 2-hour mark, guys. We need to wrap it up. So for me, I've been your host for today, Kigen Kiplimo.
I have been Easter Fanning.
And this gentleman has been
I've been
Dan
Easter
Kalia. Until next time, guys, stay safe. Cheers. Bye.
Bye.